I'm Jessica Midden for IBTimes TV, and joining me today is IBTimes editor Mike Obel to talk about what QE exactly is, since we do have a lot of people debating whether the Fed is going to taper back stimulus in September. Now, for those who don't understand, because this has been going on for a while now, what exactly is QE?
It's a great question, and it does get used a lot without explanation. QE is short for quantitative easing, which itself is kind of a euphemism, something you'd expect from Washington, and it basically refers to the attempt by the federal government, that is to say the central bank, to stimulate the economy by increasing the money supply. And it's happened a number of times in this country and elsewhere. In the most recent round of quantitative easing, it started because of the Great Recession in 2008. And at that point, the Federal Reserve, the U.S. Central Bank, was holding about 700 to 800 billion in assets, and they decided to go out and buy lots and lots of bonds. The reason for that, the reason for QE, is because if you buy bonds, you create demand and you raise the price, but the price of bonds moves in the opposite direction from the interest rate. So if you can cut the interest rate, supposedly that stimulates the economy. In 2008, November, we started, and the balance sheet of the Fed went from about 700-800 to 2 trillion. In November of 2010, they did it again, and the balance sheet went from 2 trillion to about 2.6 trillion. Right after that, they tried something else to stimulate the economy, and then in September of last year, they launched the third phase of quantitative easing, of this heavy bond buying, and the Fed's balance sheet is now it's actually over 3 trillion. What's been happening since September is that the Fed has been buying $85 billion a month in bonds. And it's been successful, at least in getting interest rates way, way, way down, near to zero. There's a lot of talk about whether it's actually contributed to job creation, contributed to stimulating the economy or not, but that's kind of the short version definition of QE.
So we are in QE3 now, which started last September, but there's a lot of debate going on about this whole Septaper that they are dubbing it, about if the Fed is going to scale back in September. And we are getting the FOMC meeting minutes next week from their July meeting, but a lot of people don't think anything is going to really happen with that. We're really going to wait and see in that September meeting. What do economists really think will happen in September? Is this really the time they are going to taper?
I think it's hard to see them not tapering somewhat. The question is just how much more than when. Most people that I read, at least, and interview, seem pretty convinced that even if they agree or disagree with tapering, that it's going to start in September. They'll crank it back from 85 billion to 65 billion or something else. A lot of the question about how much tapering or reduction in bond buying actually takes place next month has to do with, as you mentioned, economic variables. What's the FOMC saying? What are earnings doing? And especially, what is unemployment doing? Unemployment has been one of the targets that the Fed has set, in the past at least, for them to begin reducing this quantitative easing. So I think September, we start reducing the bond buying, and the phrase on Wall Street is taper. So that's the second part of the vocabulary lesson today. QE, taper.
Taper, scale back.
Yeah,
right.
Exactly.
Well, thank you so much again for your insight. It was a pleasure.
You're welcome.